Welcome to the Gamma Brief. I'm your host, Alex. If you're new here, the Gamma Brief is an experiment. I'm using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. Videos explaining how the site works and the briefing will be dropping soon. As a reminder, the transcript for this channel is AI generated but read by me. If you notice something is incorrect or not quite right, let me know in the comments and I can fix it. More features are being added based off of your feedback. You can check out recent features suggested by you at gexlog.com/dashboard, including the new historical viewer and behind the scenes AI agent connectivity, meaning you can use your agents now to extract even more data than what you can see on the dashboard. Without further ado, let's get into it. It is Friday, May 15th, 6:45 a.m. Eastern. ES futures are trading at 7,449 against an SPX close of 7,501. The prior session's call for a range-bound tape missed as price breached our 7,500 call wall to close at an all-time high. If the overnight gap holds, then the structural support matrix is instantly tested at the opening bell. We are operating in a fully positive gamma regime with plus $39.7 billion in net dealer exposure. No flip level exists today, meaning dealers are entirely long options and will mechanically sell rallies and buy dips to maintain their neutral exposure. We are now tracking day 5 of a mixed or chopped forecast within an established positive gamma environment. Volatility is elevated with the VIX at 18.76, indicating an underlying risk premium despite the dampening flows. The equilibrium zone shifts today. The put wall resets to 7,500 and the call wall moves to 7,525. ES futures at 7,449 have already breached the put wall at 7,500. Dealer gamma support has failed pre-market. The 89-point expected move reaches down to 7,360, mathematically projecting a test or breach of the 7,500 put wall. The 89-point expected move reaches up to 7,538, mathematically projecting a test or breach of the 7,525 call wall. ES sits negative 50 above put wall, 76 from call wall. Gap fade reprices floor to 1. The overnight tape is dominated by geopolitical risk as tensions involving Iran and the Strait of Hormuz pushed Brent crude above $107, triggering a sharp risk-off rotation in Asia that sent the Kospi down 3.2%. Across assets, ES futures are down 1.01%, the VIX is up 8.7%, and the 10-year yield is up 1 basis point. Sector performance from the prior session showed technology leading at plus 1.9% alongside utilities at plus 1.3%, while real estate lagged at negative 0.6% and basic materials dropped 0.9%. Today's risk radar features the New York Empire State Manufacturing Index at 8:30 a.m. Eastern, followed by industrial production at 9:15 a.m. Eastern. An upside beat on the manufacturing data will likely face immediate friction from the dealer hedging flows, whereas a sharp miss risks accelerating the overnight weakness. The environment is consistent with defined risk income setups inside the boundaries. It is hostile to unhedged directional momentum trades. A sustained break above 7,525 invalidates the mean reversion thesis. The primary plan targets range-bound mean reversion, triggering on a hold between 7,500 and 7,525 to capture volatility compression. The alternative plan triggers on a sustained break above 7,525 call wall, shifting the posture to a breakout rally targeting resistance zones. The market is coiled The market is coiled tightly and overnight headlines are applying immense pressure to the floor. The regime is range-bound, but fall is elevated. Size down, let it come to you. Level set, buys defined. Good luck out there. Standard disclaimer remains. This is market intelligence, strictly not financial advice. Options are high risk. Manage your size and trade your own plan.